following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. It's time for Volatility Views, the premier radio program for volatility traders. Each week, we'll dive into the world of volatility, how to manage it, profitable strategies, and how to avoid the pitfalls of trading volatility. If it involves volatility, you'll find it on Volatility Views. And now, the Volatility Exchange is proud to present your hosts, Mark Longo and Don Schlesinger.
Welcome back to the Options Insider Radio Network and our newest program, our newest addition to the network, Volatility Views. We've got a nice little preview show for you today to give you a little taste, a little bit of what we have in store for you in the coming weeks here on Volatility Views. Of course, my name is Mark Longo, and I will be your tour guide for this voyage through the world of volatility. However, I will not be going on this journey by myself. I am joined by my co-host, my partner in crime, the yin to my yang, Donald Schlesinger. Don, welcome to the Options Insider Radio Network.
Thank you very much, Mark. A pleasure to be here, and I'm looking forward to our association and to the upcoming shows that I think will be exciting for your listeners.
Yes, I'm looking forward to it as well. Now, Don, obviously our listeners are familiar with me from all the different shows we already have up on the Options Insider Radio Network, but since you are new to the network, this is your first appearance for our listeners. Why don't you take a minute to introduce yourself and tell them how you came to be co-hosting a program about volatility and volatility trading?
Well, it's been an interesting journey. I actually started out, and I always consider myself to this day to be an educator, a teacher. And I was, in fact, a teacher in the New York City school system for about 16 years. Had an interesting combination of specialties in both mathematics, which served me well on Wall Street in the years to come, and also foreign language. I taught French, and I speak French fluently, so it's a kind of a strange left brain, right brain association of the two. But after 16 years of teaching, I was kind of wooed away from the educational portion of my background and onto Wall Street from a friend who was an options specialist on the Amex. And he knew of my mathematical abilities, and he said, you know, Don, you really ought to give this a try. People are doing things with options that are very interesting, and they're very mathematically oriented, and we think that you might work out well. So his boss actually made me the offer that you couldn't refuse, to take a leave of absence from teaching, try this out, see if I liked it.
So he brought you over to the dark side then.
He got me over to the dark side, and we started an off-the-floor operation. And after about 6 months of entering spreads and different strategies and trades, one of the brokers on the floor said, you know, your strategies and what you're doing and the way you're trading volatility and selling time premium and straddles and strangles seems very, very similar to the way the head options trader at Morgan Stanley also seems to want to operate. If you'd like, I'd give you an entree, and why don't you go and talk to these guys? So I thought to myself, my goodness, how am I ever going to get into Morgan Stanley with virtually no background in the industry and 6 months and still a little bit wet behind the ears? But it turned out that I went over and I interviewed. And strangely enough, I think to this day, what got me the job wasn't so much my extensive knowledge of the options industry, to which I was rather new, but the fact that I was at the time and continue to this day to be a recognized authority on casino blackjack. And I've had a very long and somewhat illustrious career teaching, playing. I have a book on advanced methodologies of play. And I think that this intrigued them during the interview. And
that doesn't surprise me at all, given my interactions on the exchanges and on the street, that they would be more enticed by your blackjack background than anything else. That actually sounds relatively par for the course.
So it served me well, and bottom line, in the fall, I was actually debating, am I going to go back to teaching? Am I going to stay with my current employer, or might I get the job there? And it turned out to be the latter. And I began on the options trading desk. And as they say, the rest is history. I had a wonderful career at Morgan Stanley for almost 14 years. We traded on the proprietary index options desk, part of the institutional equity division, Worldwide Options. After about 10 years, they actually approached me and things came full circle, and they asked me if I would like to head up an educational effort, an initiative that they were establishing for worldwide training and education of equity derivatives. And so I actually left the trading desk and we started to devise seminars and educational presentations that we did both internally for our own staff at Morgan Stanley and perhaps more importantly for our clients all over the world. And I did that for 4 or 5 years before I kind of kicked back a little bit and decided that I might be able to do the same type of thing without necessarily coming into work every day. And so I left the firm, but I continued to do consulting. And I did it not only for them, but for many of the major investment banks on Wall Street and continue to do so to this day. But while I was at Morgan Stanley, I needed a colleague to help me with the presentations. And it was my great fortune to hook up with a gentleman by the name of Robert Krause, who was at the CME doing similar types of presentations. And I kind of stole him away from the CME, brought him to Morgan Stanley to be my partner in crime and to do these presentations all over the world. And so it's kind of ironic that we remained wonderful friends and colleagues for the years subsequent to my semi-retirement, if you will. And that's what has led us to this latest venture, the Volatility Exchange, where Bob is the CEO and chairman of the board, and where currently I am now the vice chairman of the board and the chief strategy officer.
Now, many of our listeners will probably remember Rob from his appearance on Options Insider Radio back in the FIA Expo back a few months ago here in Chicago. And that was a very interesting episode for me because it was really my entree to Volex and the vol contracts and what it is that you guys do over there. And since you are now with Volex, and Volex is the reason that we are doing this show here, I think it's important to give our listeners a bit of a background on what it is that you guys do over at Volex.
Well, about 1990 or so, the idea came to Bob that the world perhaps is trading volatility in its current form, which was VIX and implied volatility, in a manner that perhaps could be improved upon. And his vision was to create a contract that would settle to and would be based on realized volatility, or what is sometimes referred to as actual or historical or asset volatility. It's volatility that's actually calculated by a formula as opposed to simply being a sentiment-based type of indicator. And Bob actually applied to the United States Patent Office for a patent on such an exchange-traded futures-like instrument that would settle to the realized volatility of any given asset, any underlying whatsoever. Well, it took, amazingly, I don't know if you're familiar with the process, but it can be terribly tedious. It took 8 years for that patent to be granted, but it finally was in 1998, and it still took Bob many years after that to crystallize all of his thoughts about what he might want to do with such a product. And the final decision was we would like to found an exchange. We would like to launch a virtual exchange, an electronic trading exchange on which people would be able to trade a contract that settled to the realized volatility of any underlying asset. And we have been working feverishly for the last year and a half, and we'll certainly talk more about it in the weeks to come, to be able to launch our first contract, to be able to make all of the necessary contacts within the industry to make such a venture successful. And we're happy to say that we've actually licensed the concept to the CME, which is now trading the first listed vol contract, as we call it, a volatility contract, on their currency pairs, and the first one is on the Euro FX. It isn't our ultimate business model to simply license out to existing exchanges. We really aspire to become our own exchange, but as I'm sure you know, that also is somewhat of a tedious process, and you have to jump through a lot of regulatory hoops, and there's startup capital involved, and assembling all of the team necessary to make such a dream come true. So we are in the process of hoping to achieve that in the months ahead.
Yeah, congratulations on finally getting some actual products out the door. I know, like you said, it's not the end goal for Volex to have the licensed CME FX contracts, but it is nevertheless an impressive step. You know, we meet with a lot of firms who have great aspirations for a variety of products and great ambitions for what they do, and for whatever reason, we never see any of those aspirations or ambitions materialize into actual products. So to see an actual physical vol contract that is actually trading right now, it's an impressive thing nonetheless.
Well, it was exciting for us, and thank you very much. And of course, as can be expected with any new contract that launches, it's a little bit slow in the beginning. We have two dedicated market makers, Optiver and Infinium, who are making markets, and those markets have actually improved as they get more comfortable with the product. The size has improved, the width of the markets, the tightness has improved as well. But, of course, we still are looking for order flow. We're looking for the public to become more familiar with the product, to know that it's there. And obviously, there's somewhat of a learning curve. So we need a bit of patience with things like this. It would be great to come out of the box racing with thousands of contracts daily, but you know very well that that's not quite the way the industry works.
A good way to notify the public about some new products would be to start a radio show about said products. So I think this is a good step in that direction.
Sounds like a good idea, Mark.
We should try something like that. And, you know, I think one of the reasons it's important to mention the vol contracts is because that is an important distinction for our listeners. You know, most options traders these days, you know, retail and even institutional to a large degree, still think only of the VIX when they think of volatility. And that's understandable. You know, VIX is featured very prominently these days in the media. It's captured a lot of mind share around the globe. But the VIX is one index, you know, and there's a whole world of volatility products and volatility trading out there, such as the vol contracts that we just talked about. And we're going to discuss them all on Volatility Views. So we're not going to be locked to making this a VIX show or anything along those lines. This is going to be a very, very broad perspective on the world of volatility. And that being said, one of the reasons that I really wanted to work with Volex on this program is because your product addresses one of the key concerns that I and in fact many of our listeners have had with the VIX since it launched, and that is namely that it doesn't measure actual realized volatility. It's just the implied vol, the S&P 500 with a a few modifications here or there for skew and etc. And ever since the VIX debuted as a real tradable product, we've been bombarded at the website with emails and questions asking us if there was some way to trade actual real vol. So when Volex came around and I learned about your vol contracts, this seemed like a perfect marriage for me for this show, because if for no other reason, I now finally have an answer for all of those emails. I can just send them to you, Don, and you can answer them all for me going forward.
Well, that's going to be a lot of fun. And there's an interesting historical perspective here, if I might take a moment. While I was at Morgan Stanley, we often did presentations from the practitioner's point of view, partnering with some of the academics and some of the theoreticians. And so we partnered with Columbia, with Kellogg at Northwestern, and with the Fuqua School of Business at Duke University to put on presentations for clients. And I can remember distinctly in the early 1990s when we went down to Fuqua that Professor Robert Whaley was there. Of course, he's extremely well known in the industry. There's an options pricing model, the Whaley-Addison model, that is named after him. And it was exactly at the time that we were doing our presentations that he actually came up and gave what was the genesis, the very germ of the idea of the VIX. And it's really funny. I'm not ashamed to say it. And despite the fact that the VIX has gone on to be very successful, I sat there and I listened to the methodology. I listened to the explanation. He talked about what the index would be. Of course, at that time, it was just the index. There were no products on it, no futures, no options. And I thought to myself, gee, why would anybody want to do that? Why would they want to trade on the sentiment or implied volatility or something that never settles to anything that's actually measured? Why wouldn't they want to do it on the actual volatility of the asset itself? And of course, in the weeks to come, we can discuss the pros and cons of the different methodologies. But bottom line is that it's kind of ironic that I had that thought a long time ago, and now here I am involved in the marketing and hopefully the success of a product that addresses that very issue that you brought up, namely that we will settle to the actual demonstrated, mathematically calculated, real or realized volatility of the underlying asset. Whereas, as your listeners probably know, VIX is somewhat different and never really measures what the volatility of the asset is and keeps settling to a future forecast, which is not quite the same thing.
Yeah, I imagine in future shows we'll be discussing at great length the utility of VIX as a prognosticator for future volatility, as well as the utility of it as a hedge. I mean, there's a lot of debate around those two concepts, and that should be fodder for multiple shows in and of itself. But it's interesting you said that you went to that presentation, because obviously that presentation was foreshadowing of things to come and how you were eventually going to be entrenched in the world of volatility. Now, Volatility Views, this is a preview show, so we should do a little bit of discussion of what we have planned for some of the upcoming episodes. And now, Volatility Views is going to be a weekly program. We plan to release it on Monday mornings to give you something to start your week with as you're commuting into work. Get your weekly dose of volatility. You'll be able to find it in all the usual places, iTunes, theoptionsinsider.com, and down the road, you'll be able also probably to stream it from the Volex website at volex.us once we get that functionality up and running for you guys. And the program will be roughly half an hour, though that length will vary depending on the content and the format as we go along. And like most of our programs here on the Options Insider Radio Network, Volatility Views will have a number of different content segments. Each show is going to kick off with our patented Volatility Week in Review. And that's where we'll have a quick rundown of what happened in volatility and volatility trading over the previous week. That will include not just what happened to VIX cash, but futures and skew and any interesting activity we see in vol contracts or in SPX or anything else out there that is relevant to volatility trading. And after that, we'll move right into our strategy session, and that's the section of the show where Don and I will discuss any trading strategies or tips or techniques or anything else that comes to mind from an educational or a trading strategy point of view. And then depending on the episode, we may also feature a volatility viewpoint segment. That's where we'll bring on a special guest to discuss the current state of volatility and volatility trading and maybe offer some educational input for our listeners. And of course, we don't want this show just to be a monologue. We don't want it to be just Don and I speaking to the masses, as it were. We actually want it to be a dialogue with you, the listener. So we will be featuring a listener question segment whenever we possibly can. And you can submit those questions in any number of ways. The easiest way is probably just to surf on over to theoptionsinsider.com and click on the forum tab on the top of the page. Once you're there, you can post your questions in the Volatility Views section of the forum. Of course, you can always call us at the Options Insider Radio Network voicemail line 312-544-9356. And just follow the instructions on the prompts there to leave your voicemail. And if your question is interesting, we may just play it on the air. And, of course, there's always the other social ways to get in touch with us. You can reach us here at the Options Insider at twitter.com/options, and you can send us questions that way via direct message or however else you want to get in touch with us. You can also follow Volex at twitter.com/Volex_info. An underscore, not a hyphen, but an underscore. Or you can just search for the Volatility Exchange on Facebook and leave your questions there on their wall. So as you can see, there are a number of ways that you can get a hold of us, and we'll look forward to hearing from you soon. In fact, Don, I think you have a few extra ways that our listeners can get a hold of us through the Volex website.
Well, yes, I'd like to let our listeners know that we already do have a rather, at least in my opinion, impressive website that is up and running and contains a wealth of information. So let me start with the contact information and then talk very briefly about what's at the site and invite your listeners to have a look around. You can email us at info, I-N-F-O, at Volex, VOLX.US. The extension is US. You can call, there's an 800 number, 1-888 Volex Corp, and the actual numbers are 1-888-865-9267. And finally, there's an email alert sign-up page where you can simply tell us that you'd like to become a member of the email list and receive any informational materials, alerts, news bulletins, etc. that we may have, and we'll be happy to put you on the list. But if I may, I'd like to invite the listeners to have a look at the website itself. It's called, or the address is Volex, VOLX.US. And I think you'll find some very interesting materials there. Of course, there's explanations about the exchange itself, the team, our members, their backgrounds, biographies, explanations about the product, what a vol contract is, how it works, what the specifications are. But there's also a tremendous research library. So there are academic papers that are cataloged there, literally dozens of them. I wouldn't be surprised if there were 100, with all sorts of extremely interesting studies of everything having to do with volatility. We're trying to add to that by writing our own articles, some strategy articles, and some have already been published in journals. Bob and I have co-authored a couple of articles, so you can take a look at that. And finally, there's an actual online tutorial. We have about 50 or 60 slides with a voiceover that I did and a text explaining. So if our listeners, just as we're having a preview show here, would like to do a little bit of homework and have a look around before they come back the next time, that would be great.
There you go. You can surf on over to Volex.us. Check out the preview show there, and you can get more of Don's sultry tones while you're waiting for the next episode of Volatility Views to arrive. And speaking of which, that's pretty much going to do it for this preview show of Volatility Views. But Don and I will be back shortly with the first official episode of Volatility Views. We still have to work out what that schedule is going to be. Don and I are across the country right now, but we actually will be in the same neck of the woods next week. We're both heading down to the Futures Industry Association Conference, the big annual show down there in Boca Raton. So it's possible, Don, if you're up for this, maybe we'll do the first show live to tape from yacht side there at the Boca Raton Resort and Club. How does that sound to you?
Sounds pretty exciting, and an awful lot of people from the industry come down there, so we might even be able to drag in a guest or two and see if we can't make that first show not only interesting from the point of view of our discussion, but maybe we can even get somebody to come along and share some viewpoints.
Yes, it's always fun when we drag them kicking and screaming onto the show, especially when we do it live and the listeners can hear their protests right up until the last minute when the show goes live. Thanks for listening to this preview episode of Volatility Views, and stay tuned for more episodes in the coming weeks.
Thank you for listening to Volatility Views. Join us next week as we keep our listeners on the cutting edge of finance and risk management with lively topics relating to volatility. Volatility Views is brought to you by the Volatility Exchange. If you'd like to learn more about vol contracts, please visit www.volx.us. If you'd like to submit a question for the hosts, then surf over to www.theoptionsinsider.com/forum and post your question in the Volatility Views forum. Questions can also be submitted via email at questions@theoptionsinsider.com or via Twitter at twitter.com/options and twitter.com/volx_info. Facebook users can submit their feedback via the Options Insider and Volatility Exchange Facebook pages. Voicemails are also welcome at 312-544-9356. Thanks again for listening, and we'll see you next time on Volatility Views. The views expressed on this program are not intended as investment advice and do not constitute an offer to sell or a solicitation of an offer to buy any securities or other financial instruments and may not be relied upon in connection with the purchase or sale of any security or other financial instrument. The opinions presented on this program represent those of the speakers and do not reflect the views of either the Options Insider Incorporated or the Volex Group Corporation. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.